Hello, everyone. Thank you for joining this adverse media screening webinar. We are just about to kick off. My name is Kevin Wolf here at Dow Jones. We're going to give everybody another minute to join, and then we're going to go ahead and get started. While we wait, I just wanted to point out on the screen, we have some resource areas available for you to click on some of the materials. If you are having any technical questions, there is a chat area that you can chat to us. Let us know if you're having any issues. There's also Q&A section, so we have a panel that we're going to be throwing some questions to later on in this hour. So if you have a question that you want to ask the panel, please, by all means, go ahead and put it in there. With how much time we have left, we'll see if we're able to get to all those questions. Otherwise, we'll pull them off and try to circle back with you individually. So thanks again for joining. And we'll go ahead and kick off in shortly. Well, we are a couple minutes past the hour, so why don't we go ahead and get started? So as I mentioned, this is a webinar for adverse media screening practices. My name is Kevin Wolf, and I'm going to go ahead and moderate this for you today. So I'm going to go ahead and on to the next slide and go through some introductions and tell you who we have here for you today to talk through this topic. So I work within the product strategy team here at Dow Jones in the Risk and Compliance group. Many of you on this call could be customers of ours at Dow Jones. If you're not familiar with us, we're a global provider of regulatory compliance solutions, primarily in the areas of financial crime, third-party risk, and sanctions and international trade. So why are we here today? We've collaborated here at Dow Jones with Themis, who's a financial crime consultancy company, on providing some best practices on adverse media screening. We're very proud of this research and what we've put into this guide, and we're excited to share the findings with you and have a nice dialogue around that. We've joined Themis with speakers from the industry as well as technology so that we're able to cover all angles on this topic. So let me go ahead and start introducing that panel. David Balson, he's up first here. David is a director of intelligence at Ripjar. Ripjar is actually a technology partner here at Dow Jones. We've actually done some research with them as well to understand how banks are using adverse media, and that's part of some of the overall topics here. And David supports organizations and global institutions in their understanding of strategic issues to tackle some of society's biggest challenges, including money laundering and criminal behavior. Next up is Gavin Lockhart-Myers. Gavin is one of the founders of Themis and an MD of the Themis think tank, and he's responsible for driving Themis partnerships between the public and private sector, as well as running the think tank. Henry Williams, also with Themis, is the head of investigations. Henry has 14 years experience as an investigator and journalist, has led teams working on several of the largest corporate investigations to be prosecuted over the last decade. And then we have Ken Gazaway. Ken's a director of EMEA, regional head of anti-bribery and corruption compliance at MUFG Bank. Ken joined MUFG in January of 2019, overseeing the implementation and enhancement of ABC controls for both bank and security operations in over 30 locations throughout the region. So what does that all mean? We have a lot of experience on the phone here today. There's a lot of great thinking, a lot of great topics that we're going to talk through. So at this point, I'm going to turn it over to Gavin, and he's going to kind of kick off the presentation. Gavin, I think you might be on mute. Sorry, Gavin, I'm still not hearing you. I'm not sure if anyone else is. Bear with us, everybody. Gavin has left. And he's coming back.
Good morning. Can you hear me now?
There you go. See, we can't have a webinar without a little bit of a hiccup. So over to you, Gavin.
So, Kevin, thank you so much. And it's fantastic to be able to share this best practice guide with you today. As Kevin says, I'm responsible for Themis's research. I'm one of the authors of the Adverse Media Screening Best Practice Guide. So let's kick off with some definitions. Though I expect that most of the 200 or so people on this call are involved in adverse media screening. For those of you who are developing understanding, or just so we have the right point of departure, it's worth covering some definitions briefly. So adverse media screening, also known as media monitoring or negative news screening, is the process by which a customer or a prospective customer is compared to or screened against negative information or data sources. And as many of you know, it's a really important part of customer due diligence and enhanced due diligence, but critically, compared to regulatory requirements on screenings for sanctions or PEPs, for example, guidance for screening against adverse media is less structured, so it's more open to interpretation. So as we get started, I think it's probably worth hearing from you about some of the challenges that those of you on the call face conducting adverse media screening. So let's bring up the first poll. So I'll give you about 30 seconds or so to vote about some of the biggest challenges that you face when conducting AMS. And while you do, it's worth covering some of the work that we've done as part of this program. So in September 2019, Dow Jones, along with Ripjar and Themis, completed an online survey to understand the challenges faced by those responsible for AMS. And respondents included frontline staff all the way through to C-suite and board members. And then we completed some further interviews with subject matter experts and practitioners from all around the world. And so then we've worked together to understand those challenges and put in place some steps to address them. So let's go ahead and close that poll and see whether you think it's the same as we think. So we're asking, what are the biggest challenges you face when conducting adverse media screening, from the quality of the news sources through to the volume of alerts and or setting your risk appetite? And so let's have a look at the results. Okay, so a sort of a variation all the way through. It's very similar to what we see. A third of respondents to the wider poll said that it's difficult to tell whether an adverse news story is credible or not. So that sort of fits in with the first result. 6 in 10 said that false positives were an issue. So it's about a third of you on this call. And actually, half of the people we surveyed said they were only getting about 5% of true matches. So again, that resonates with what we see here. So that's really helpful. And so moving on to the next slide, we all know that these are important challenges because unless they're addressed, firms are exposed to financial crime risk. And most of the major regulators say that adverse media screening should or could be conducted. So to take some examples, the FCA in the UK say that adverse media should be used both at onboarding and then for periodic reviews. FinCEN in the US, again, say it should be used as part of a risk-based approach, as does FATF. So the regulators are clear. And on the next slide, we can see that the regulators are not shy about implementing fines that are directly related to AMS failures. We'll look at some case studies later on in this webinar, but the two examples that stand out from the UK are on this slide here. By way of example, in June 2018, the FCA issued a £900,000 fine for Canara Bank, highlighting failures at onboarding and subsequently. And then in a separate case in 2019, the FCA notice related to Standard Charter highlighted that some UAE branches failed to conduct due diligence in response to trigger events, including when negative press warranted it. So, and that resulted in an FCA fine of £102 million for this and other failings. So let's get to the launch of the guide itself. on the next slide. We understand the imperative to conduct adverse media screening, but as we saw in our research and as the poll that we've just conducted reinforces, many firms and many leaders find this really hard. And the best practice guide is intended to give firms an easy-to-use and structured approach to adverse media screening. And so the ultimate aim is to help organizations identify special interest and reputationally exposed persons and entities according to considered categories of risk, enhancing protections around financial crime, and enabling banks and other institutions to do business really effectively. And our recommended framework can be summarized in 6 key steps that we'd encourage all of you to consider. I'm going to bring in some of the expert panelists, but just to take the first one, it's around setting the risk appetite clearly and performing risk assessments. Now, I noticed from the poll that didn't come out as a key issue, but as a CEO of a tier 2 bank said to us, without the right principles and a really clear risk position, our board can waste time debating the importance of individual results. And at Themis, we see many firms where CEOs and senior managers spend a huge amount of time debating adverse media screening results, in fact, more than any other screening and due diligence process. And this is broadly because, as many of you will know, AMS rarely returns a binary result. So setting the parameters about what constitutes acceptable risk is a critical first step. So this is establishing the firm's risk appetite, the amount and type of risk that an organization is willing to pursue or retain, and variables that are considered are the type of report, the degree of linkage, and the timeliness of the piece. So moving on to the second point, ensuring that firms screen at the right time. Now, in our benchmarking survey, 9 in 10 firms say that they screen during the onboarding process. But the interviews we conducted brought to light that many regulated entities lack this defined screening strategy, leading to variations in identifying who should be searched for and when. So our recommendation is that firms should search for adverse media as part of your customer onboarding due diligence, so before account opening, and then perform ongoing monitoring based on a schedule guided by your company's policies and specific customer risk levels. It's also important to identify trigger events. So these are activities that warrant a prioritized, unscheduled investigation of news sources as a result of different account activity, law enforcement relationships, media scandals, or higher risk counterparty relationships. So just turning to Henry, I know you've been involved in this area. What's your perspective on the timeliness of these sorts of screening points?
Thanks, Gavin. Well, I think it's quite interesting because obviously when you're talking about screening at the right time, clearly you want to be doing your screening before you take on a client. The last thing you want to do is find out someone's exposed to sanctions or adverse media after they're already on your books. But I think what this point's really making is that when you're talking about screening at the right time, it's to keep your adverse media checks in a constant state of renewal. And that has to be something which is informed by your risk appetite. If someone, for instance, is from a country like Russia or Iran, which is periodically being sanctioned, then you need to keep on checking that your subjects aren't exposed to that kind of risk. Equally, I'd say another thing which is very important is what you mentioned as trigger events. Now, in sort of layman's terms, these are situations where clients are potentially, bad news about your clients is potentially going to come out. So you could think of, for instance, the Panama Papers, where a lot of reputable businesses suddenly found themselves caught up in that, or most recently the Danske Bank scandal, where you've had a huge fine issued from a reputable bank doing mirror trades off the back of Russian investors. So essentially, when you're looking at adverse media, it has to be an ongoing process. It can't just be before; it has to be during a relationship as well.
Yeah, thanks, Henry. That's really helpful, and they're two examples that we all know about. So moving to the third strand there, it's absolutely critical that checks are based on the current and credible news sources, and firms really have trouble ascertaining the credibility of an adverse media alert. There's specific challenges around whether a story is politically motivated or whether it's an allegation rather than a conviction. So firms need to rely on credible news sources. Timeliness is also important. And in some of our discussions, many people said that after some case or an initial report, the initial identification of an allegation, further updates as a case went through court, for example, can in some cases not be flagged to screening teams. And going back to you, Kevin, I know that many firms rely on Factiva, particularly as much as of the information that they're looking for is not available through standard web searches or is uncategorized or unindexed. Could you give us some examples and some of your expertise around this particular strand of the guide?
Yeah, absolutely. Thank you, Gavin. It's kind of the backbone of Dow Jones. Right? We built this business. Dow Jones has built their business on credibility, journalistic integrity. That's woven through our products and services so that the guessing game is kind of taken away. So is this a credible piece of information? Is it not? We're licensing that content and we're vetting all of that content to ensure that what is in our databases is something that customers can count on and know that when they read it, it's something that they can make a business decision on. And then the timeliness factor, you're 100% correct. How you get it, when you get it, where you get it, that information, that everything is moving very fast today. There's lots of people who need to do this type of research. So being able to give them tools to do it, that's where some of our partnerships with somebody like Ripjar from the technology standpoint is they're able to take some of that, how we've coded and indexed our content and applying their technology, which I know David will touch on later, is what has helped us kind of promote this idea of adverse media screening to take the worry away of, okay, what am I reading? And is it something that I can count on? So definitely something that's important for us and how we, look at how we service our clients today.
Right. Yeah, thank you very much. So moving to the fourth area, it's the importance of creating and maintaining an audit trail. This is in many ways a basic step, but no matter what the outcome of your adverse media screening program, keeping a documented audit trail with the right supporting materials that show the rationale behind the decision is key. And we've seen firms that get this wrong, and it's so costly, particularly where a firm is found to be involved in a financial crime issue, and a regulator or an auditor, when they're inspecting customer files, will want to see the basis on which a decision is made. So I want to turn to Ken now, actually. And Ken, with your leadership role, how do you set the right processes in place to ensure that you have the right audit trails in position, both at your current firm, but potentially in other leadership positions that you've held?
Sure. Thank you, Gavin. So the importance of an audit trail, as Gavin said, cannot be overstated. It's important that you document why you made a decision, what led you to that decision. If not for nothing else, putting the regulatory concerns aside and the regulatory obligations, it's important to acknowledge that while we all absolutely adore our current jobs and would never think of moving, people do leave and you go to other places. And when that happens, you don't want to have a single point of failure. That the historical knowledge, the institutional knowledge of how that decision was arrived at cannot reside in just one person. It needs to be documented. And in order to get to that point, it's important to establish a framework. The framework should include rising escalations of requirements of how you document things. So the very basics is to make sure that you document that you did run the adverse media searches. And then if it is an increased level of risk that's ascertained by the search, then you have to ratchet up the amount of documentation that you have. Certainly when you get to your reputational risk committees or other governance structures, it's important to document what decisions were made, what the basis was for those decisions in those governance forums. But even for lower level decisions, it's important to still have a record, but you may be able to downgrade the amount of documentation required to even something as simple as an email to a group mailbox, so it doesn't reside in one person's email, or a note to the file, because it's important that you have that continuity. And another thing with regard to audit trails, in addition to satisfying the regulatory proof that you may need if you ever are visited by your neighborhood-friendly regulator, it's also important to help ensure consistency. Because it's very easy when you're in the middle of business as usual and you're dealing with all of these escalations to lose sight of how one escalation compares with another for similar issues. But having that audit trail enables something like an independent testing group or your audit function or an independent consultant to take a look at those on a periodic basis, once a year or once every other year, to see how you're doing, to ensure that you're applying things consistently and taking a consistent approach in addressing that framework.
Yeah, Ken, thank you very much. It's helpful to just reinforce the point about organizational resilience as people move on, but also those other practical steps. So the penultimate area is the importance of using tech to help reduce the burden. So we've seen from the poll, and we know that, as I said at the beginning of this discussion, many firms find that they're facing a completely unsustainable volume of potential AMS matches. And sophisticated adverse media tools can help reduce false positives and assist with a number of other challenges, including the ability to screen customers who move in and out of different risk categories. Turning to you, David, I know the Dow and Ripjar tool uses artificial intelligence, machine learning, natural language processing to help overcome some of these challenges. Can you just help those of us on the call understand how technology can help?
Yeah, sure. And I think there's a lot of excitement around artificial intelligence and the underlying disciplines that really lend themselves quite well to the problem of marshalling some form of answer from large volumes of textual data, such as the news. So AI is that broad machine reasoning. How can machines think like a human? Machine learning is really a subset of that, focusing on, often I refer to it as machine teaching, right? You're showing the machine how to find the needles in the haystack, and the code can actually write itself to find and hone in on those things that are much more valuable. Natural language processing is sort of the ultimate distillation of that, focusing on reading the news like a human would. So extracting things like entities, names, organizations, etc., as well as trying to group and classify what a news article might be about, whether that's about a risk like money laundering or some other predicate crime, or more strategic risks such as sanctions evasion, etc.
Great, David. Thank you. Thanks very much. I think we'll probably cover that in a bit more detail in the Q&A. So just the final area, but it's an important one, is around the importance of establishing a really strong anti-financial crime culture. And so many of you will know that anti-financial crime controls can easily be undermined by a poor culture of compliance. And a strong AML culture can help prevent shortcomings and identify issues before they become a concern or lead to inefficient processes. Just turning back to you, Ken, again with your leadership role at MUFG Bank, how have you helped set the right strong anti-financial crime culture?
Sure. So setting the culture is one of those things that in the financial crime world has become a buzzword. It's used in every settlement with every enforcement authority around the world. It's a part of every enforcement authority's guidance on how to prevent financial crime. We all hear tone at the top. And more recently, we've started to see an evolution away from just tone at the top to include tone among management, tone among the entire population of the employees. So it is broader. And the way that you foster what culture really means is, especially in this context, we all need to move away from thinking of KYC as a process, a procedure that you get through at onboarding or at periodic review, and going back to exactly what does it mean? What does it stand for? It's know your client. And part of that includes the shift away from having it being a procedure to being something that actually is embedded in culture. It's having the first line, the people, the business line, the relationship managers understand why we do this. Because more often than not, instead of seeing it just as a checkbox, when you get down in the weeds and explain to them, this is the risk that we're trying to address. This is why we care about adverse media screening. This is how it protects not only the bank or the financial institution or the company, but also you individually. Once you get that greater understanding, it does kind of, I've seen the light click, and you can see people actually starting to stop thinking of compliance requirements as just a check the box exercise, which is what all regulators are keen for us to avoid. And then moving into the idea of making sure that you genuinely know your clients. And once you understand the why of what we're doing, then you can move into actually applying that. And it goes beyond just, the onboarding stage. It's really engaging with the understanding of what the adverse media screening is trying to seek to mitigate a risk and where that risk lies. And the more you understand your clients and truly get to know your client, the more that culture of compliance actually just becomes second nature. Because if you're aware of the risk, you need to make sure that you're adopting a mitigation strategy. And then if there are residual risks, you need to raise that. So in essence, risk is really the amalgamation of all of the other steps in this procedure. And that steps 1 through 5 all lead to a financial crime compliance culture. So that people don't think of it as that's compliance. They think of it as this is something I need to be doing every day. And that's the end state. Now, how we achieve that at MUFG is it's always a work in progress. It's compliance is a journey whose road never ends. But getting out there and actually talking to people and having them understand the why, and telling them that I in compliance will never ask a question unless it stems from one of 3 things: a legal or regulatory requirement, something that is part of the evolving standards of best practices, as we're learning in this webinar, or third, and probably most importantly, a lesson learned from a prior enforcement action. And I will, if I ask any of you from a compliance perspective and you don't know why, ask me and I'll explain it. And it will be one of those 3 things. And the more you get that engagement, the more people understand that they too are invested in actually in achieving that culture of compliance.
Great, thank you so much. And I think that's something that we've talked about, or many of the panelists have talked about on this call, about making the real world impact of some of these financial crimes come to life for our teams and the people we work with. So appreciate that example. But let me leave it there. I mean, that's an overview of our best practice guide. I know that we'll share the full report, and we hope that it's a useful document for you to calibrate some of the work that you're doing. I'm grateful for the opportunity to speak to you, but for now, let me hand back to Kevin.
Thank you so much, Gavin. That was a good conversation there, and we'll keep it going as we move forward here. So I'm going to move into this second poll. So you should be seeing the questions pop up now. And it's referring back to everything we just basically spoke about. Which of these steps would you like to understand more? So it's outlining each step in the guide. We're going to put this up for another, about 30 seconds, as Gavin had done previously, and get you to see your feedback now that you've kind of heard those steps. You've heard some examples. You've heard back from the panelists on some of the areas of their expertise in the guide. and we'll go ahead and see what those results look like. And as we wait, just an additional reminder, the questions are starting to come through, so thank you, everybody. I'm trying to feverishly jot them down so we can try to get them answered by the folks on the panel, and we'll do our best to get them all. But please add your question in. If we can't get to it today, we'll certainly circle back with the individuals and get some answers for you. And if you have still having any issues, technical issues, don't hesitate to reach out to the chat as well. We have folks sitting behind the scenes here to help you. All right, let me close this out and see what our results look like. All right, 27% looks like using the right technology to reduce the burden is the leader there, with setting a risk appetite and building checks based on credibility. So we will see if we can't dive into these topics even more as we move forward into the Q&A. But next up is going to be Henry. He's going to be talking about some case studies, and then we'll come back to the panel. Over to you, Henry.
Great, thanks very much, Kevin. I know we've got a sort of mixture of professionals on the call today, so I'm going to sort of go through some case studies, which hopefully will be enlightening, and sorry if you've heard them all before. But the big one I was going to look at was 1MDB. Now, I know this is a story sort of close to Dow Jones's heart because a lot of it was broken by the Wall Street Journal's Bradley Hope. But I mean, also 1MDB is a great, sadly, it is a great case study in how the international financial system facilitated a huge money laundering spree and through that lots of financial crime. Now, the issue here is that 1MDB was broken, the story was broken in about 2015, and much of the crimes were committed earlier. So what I want to look at in terms of an adverse media point of view is, could it have been discovered before the documents were leaked, which created the big scandal and all the firm's exposure to it? So when I was researching this, I think the answer has to be yes. And the reason I say that is from a lot of what we've been discussing before, such as setting a risk appetite. Now, for people who don't know, 1MDB was a development fund financed by the Malaysian state through issuing bonds. So from immediately you have a red flag there because it's state-owned. Secondly, you have the fact that Malaysia is a country with a history of corruption. And then thirdly, one of the most telling factors was that the person ahead of it was the Prime Minister, who also doubled as a Ministry of Finance. Now, those are things you ought to be looking at if you're going to be doing business with a company. The extra risk parameter here was the fact that Najib Razak, who was the Malaysian Prime Minister at the time, had a history of corruption. And when we're looking at adverse media, Malaysia has a state-regulated press, so it's quite difficult to write nasty things about the Prime Minister. But what you do have is a lot of opposition figures talking about the Prime Minister. And they have said, for instance, in 2009, one opposition figure described Najib Razak as institutionally corrupt. And this was due to the fact that a woman who was alleged to be his mistress helped him sign a submarine deal with the French Navy to import submarines to Malaysia. And then she was subsequently murdered. So that is quite a big red flag on him already before he became the head of this fund. Then the second thing is, when 1MDB started getting up and running in about 2009, 2010, Anwar Ibrahim, who was another Malaysian opposition figure, started referring to it as Najib Razak's slush fund. Now, that again should be raising some red flags and warranting further investigation. And this is just looking from an adverse media point of view, not just from a sanctions check point of view. The other issue you have is you have Joe Lau, who's the person pictured here, who was the sort of architect of the fraud. He was, at this time, he was busy sort of spraying bottles of champagne around sort of Saint-Tropez in Las Vegas, and no one could quite understand where his money was coming from. In 2010, 2011, Malaysian sources were beginning to link him to 1MDB. So there's a whole host of red flags here, which weren't picked up, and a lot of businesses were exposed, but the one I want to comment on especially is Goldman Sachs, who now faces something like a $2.6 billion fine for underwriting bonds from 1MDB. And they underwrote about $6.5 billion worth of bonds, and without doing any of the proper checks. In fact, Tim Leissner, the Goldman Sachs executive, was complicit in the fraud. And again, your compliance department should be thinking, well, they made £200 million they received, Goldman Sachs did, for underwriting these bonds. So again, another huge red flag. And in fact, Tim Leissner has since been sanctioned by SEC. And he talks of Goldman having a culture to conceal from compliance. So I think this is a real case when you have frontline people who are trying to win big deals and not think about compliance. And again, it highlights the importance of adverse media in teams who are supposed to make sure these deals are above board. Now, quickly, second one I want to get onto is about the casino industry. Again, casinos are a front line for money laundering. It's a very quick way to hide your cash. This is a recent case we worked on, talking to a London-based casino, and someone walked in, and typically when you enter a casino in the UK, you have to supply your name and driving license or passport, and they will do a sanctions check on you. And this individual had come over from Turkey, and he came up as being sanctioned. So he explained to the people behind the counter that this was out-of-date sanctions, and it was because he had been tangentially linked to an entity. And in fact, he was able to gamble freely in Cyprus. But obviously, because of the casino's risk parameters, they went up now and said, okay, well, you've fallen foul of a sanctions check. Now it's time for an adverse media check. So they checked the adverse media and sure enough found that the casinos who were allowing him to gamble had also been indicted by the Turkish government for laundering another $5 billion of cash. And in fact, the bank which he was linked to was also being exposed for terrorist financing. So I think in that case, the casino saved itself a potential fine for being complicit in terrorist financing and equally a reputational risk. And the coda to that story is that the gentleman then just walked up the road to another casino who let him in without no questions asked. So it really shows the importance of adverse media screening, I hope, both these cases. Sorry, that was a very quick run through, but I hope it was interesting and useful. Back to you, Kev.
Thanks so much, Henry. So what we're going to do next, kind of as a segue into, how can these types of tools help as early warning signals? I think that's kind of where Henry is, and those use cases are really identifying. So we're going to come back to the speakers, and thanks again for everyone's participation as the Q&A box is filling up with questions. I'm jumping back and forth, seeing what questions we can pose to the group. So I've got a handful to go with. We've got about 22 minutes left. So I'm just going to kind of go round robin here and just start asking some questions to the panel. And then we'll see how much time we have left, how many we can fit in. The first one's going to be over to you, Ken. This came from the group, from the audience. Any guidance on how to proceed and evaluate when there is no conclusive result to the adverse media found? For example, allegations made against the screening subject, but no apparent charges were brought against them.
Yeah, thanks, Kevin. I specialize primarily in ABC issues, and I like to say in the ABC world, we deal in the world of rumor and innuendo. It's rarely that you're going to have something that is black and white, because for us, if we're banking a potential counterparty and we wait for there to be final resolution, it's too late. If we've already onboarded them and we already had indications of allegations and speculations of investigations and reports of subpoenas being served, it's too late for us to have mitigated that potential risk. So when you don't have something that has reached a final adjudicated decision and there's not a formal charge, it's really up to you to determine what the risk profile is. That's why the risk assessment at the outset and identifying your entity's risk appetite is important, because depending on your institution's risk appetite, you may be willing to accept the risk of a low-level allegation that hasn't been proven. It does depend on the nature of the risk. Everything is, in the ABC space especially, is facts and circumstances specific. But for us, when it comes down to a potentially high-risk issue that we think could result in charges down the line, we will escalate it for senior management to review and to analyze and to assess. We will ask the relationship manager who owns that client and who owns that risk why they feel comfortable. and provide all of that information and escalate it for senior management to at least take a risk acceptance that they know about the risk and they're willing to proceed. We also do due diligence calls with counterparties and say, look, we're not hiding the ball here. If there's an issue that we've identified, we're not going to try and hide it from them. We're going to say, hey, we've identified this issue, this allegation from adverse media. Can you please comment on it? And even if they say we can't really comment on it, it's an active investigation, we can at least say, well, why don't you tell me about your compliance program that you have in place to prevent something like this from ever happening, just so that we have something documented that gives us the comfort of why we feel comfortable to proceed. Back to you, Kevin.
Yeah, no, thank you. That's great, Ken. And I think on that same topic of risk appetite, Henry, I'm going to send this one over to you because I know you've made comments about that already today. Do you have any tips on how to do this, how to establish what is maybe the right blend of that appetite of being too cautious or being too conservative and vice versa? So any thoughts on that, Henry?
Yeah, certainly. I mean, I think there's lots of different parameters, and obviously it'll vary from institution to institution. What I would say is that maybe the best way to do it is to order it thematically. So you look at countries and you divide these into high-risk countries. For instance, you have Transparency International's Corruption Perception Index, which is a really useful tool in doing this. Then you need to look at industries. What are the dangerous industries? And so obviously gambling, casinos, in the example I used, was a very high-level one. And then you want to look at things such as sort of political exposure and risk of sanctions. And again, sorry, that's just going back to the one MDB case. And I think those things, because we're talking about machine learning and educating machines, so much of it comes from experience of looking at previous cases and knowing where the problems were. So, if you're looking at a Russian banker who made all his money in the early 90s, from experience of lots of investigations like that, I know that that's a pretty big red flag, but there's not necessarily anything out there on that individual. So I think what you want to be doing is looking at the kind of types of crimes you're exposed to, how that's how your business is likely to come across that, and develop your risk parameters accordingly. Does that make sense to you, do you think?
Yeah, and that actually leads into another question that I think might go towards David, right? Regarding machine learning, what kind of crime types? What are you looking at? What kind of classifiers are within the news? Because as we all understand, the news can be the ocean. It could be anything. How do we kind of limit that kind of view, that angle that we're looking at, which would lead into what kind of appetite do we want to have? So, David, I'm kind of adding on to a question that a person asked, but it was talking about the possible filtering the information on financial crime only, and how does RipJar apply those types of things? And I think that also leads into some of the comments you made earlier about the natural language processing and machine learning.
Yeah, so these technologies are really, really great for honing in on the specifics of what might be material risk to a financial institution. So when we process data from Dow Jones, I think it's something like 1%, less than 1% of all those articles every day, something like 2 or 3 million, only 1% of those really relate to material financial crime risk that you should care about. And so when you're running searches or moving to a more real-time alerting, and that's another benefit of how technology like AI can really bring cost savings, is you're flipping from a search-based model to an alert-based model. And you want those alerts to be as high quality as possible. And that's where that machine learning comes in, because it can tell the difference between what's a material risk and what's not. Over to you.
Great, thank you. Let's see. Kind of shifting, I guess. There's kind of a question. I think Gavin might come back to you, because I know you were talking about the definitions early on, and somebody asked, "Are you sure the adverse media is a standard CDD component and not just enhanced due diligence?"
Yeah, thank you very much, Kevin. Look, if you look at the regulatory guidance on this, and the details in the guide itself, which will be sent out to you, adverse media screening is included in CDD as well as EDD for regulators, and so that is clear. If we take the FCA example again, they will expect AMS to be conducted on onboarding and an enhanced screening position. So I would say it was both.
Okay, thank you. I'm going to go back to Ken, more of a kind of overarching question. Just some lessons learned from implementing AMS, some adverse media screening in different countries. Any just kind of general lessons that you've learned in what you've done so far that you could share with the group?
Sure. Adverse media screening policies and procedures are one thing, and it's important to get those right. But as much as we struggle over the right wording and making sure that it's something that is readily understandable, it's important when you're working with counterparts in your organization in other countries that whatever language you draft your original document in, for us, our operations language is English. We draft out all of our policies, procedures in English, but just because that's the operations language doesn't mean people genuinely understand exactly the nuance of what we're looking at. So it's important to have those documents accessible in local languages so that people understand what it is that is expected of them, as well as having the buy-in of the local management, because the tone from the top doesn't just reflect what the organization globally is doing or even regionally. It's down to each individual location. But with regard to specifically adverse media screening, there are significant benefits of having other people in other countries that are local who can review some of the nuances. Because even if you're using a platform that is advanced, that harvests things across multiple languages, there are always going to be nuances to local language reporting that's captured in adverse media screening that may not come across in the translation you receive. So it's helpful to have those counterparts. And if you don't, always make sure that if there's something that you're not entirely sure of in the translation that you're receiving, that you think about it carefully. Go to a different source that might translate it for you differently, because the context is really important. And finally, it's more of a culture thing, and that's ensuring that you recognize that what constitutes an elevated risk adverse media hit for you in, whether you're in London or New York or Paris, doesn't matter. Wherever you are, that assessment of what constitutes something that is a risky adverse media hit may be very different in a different location. So when you do that risk assessment and set that risk appetite, it needs to be something that is genuinely translatable across all of the locations that you're responsible for, because and to make sure that you're careful when you're crafting the words that you include in that risk appetite statement, because you can't say things that are vague, like, increasing layers of risk. Well, what is risky in, one jurisdiction may not be for you and yours. So being aware of those differences and being attuned to cultural interplay is critical when you're dealing with AMS in multiple jurisdictions.
Yeah, thanks, Ken. And we hear that from our clients a lot. It's that consistency, making sure that whatever it is you're saying is consistent across the board. It definitely helps. I'm gonna stay with you. Sorry, keep talking, because something just popped in. Somebody wanted to maybe potentially a little bit more elaboration on one of your comments where you talked about, I guess, the compliance due diligence call that you may make. Hey, we've read this about you. We wanted to understand a little bit more. Somebody asked, okay, how can you have these compliance due diligence calls while avoiding the risk of tipping off?
Sure. Now, it's an excellent question, and I want to make sure that we characterize the due diligence call that's done as part of onboarding, or even potentially as an event-driven review, is very distinct from one that may be triggered from a SAR or other transaction monitoring hits and those types of monitoring systems that you may have. So the adverse media screening due diligence call that I alluded to earlier is based on publicly available information. So you're not tipping anyone off of anything because it's publicly available information. So the open source media searches that are run through Factivo or any other platform that you may use, those are public. So you're not tipping anyone off. That is a very different animal from dealing with your SARs and the investigations associated with suspicious activity. So definitely there is a distinction. I would never advocate that you go to the client and say, "Hi, I've seen you doing something that I think is suspicious." That's not good. So definitely make that distinction that the due diligence call should be treated only when it comes to open source adverse media.
Thank you. Thanks. That's a good clarification. I want to shift back to the guide a bit and the research that was done by Themis and the interviews that were happening. And this is going to be over to you, Henry, that a third of the respondents flagged that the volume of alerts generated a particular challenge. What are lessons that, what are the lessons from this work in the volume? Because we have actually gotten a couple of questions where people are asking about how many full-time, people, how many bodies do you need to do this work, which to me relates, and we hear this a lot in our conversations with our customers about volume and how much, how many people are you screening against regionally, globally? How much volume of news is there out there in the world? And then being able to manage that. So thoughts on the volume piece of the guide.
Yeah, sure. So I think, as was highlighted in the first poll, volume is a really big issue when you're dealing with adverse media searches. What I would say is I've been fortunate enough, I've worked in quite a few different risk consultancies, and one of their most sort of jealously guarded bits of IP is their search strings, which they use on Factiva. And these are typically developed over time. You can have sort of crime within 10 words of the person's name, for instance. And then these can get ever more and ever more complex. And they are very useful, though, because they do screen out the false positives, which is, as we're discussing, a perennial problem. The other issue, though, with false positives, obviously, just going back to 1MDB, Joe Lau, the central person, there's so many different ways to spell his name, and equally, his surname Lau is also the English word low. So it becomes very difficult. And so the trick there is to find an uncommon connecting word, which you can then use as a way to filter all the sort of relevant results in, but probably accepting that you might miss the odd piece. But the good news is that so much news is syndicated that you won't miss too much. But I think you do have to be pretty cute with your search techniques. And certainly, I think this is one of the big calls for AI in adverse media searches, particularly when it's been enhanced and developed by people with an investigative mindset, is that you can eliminate this issue, so that when you're looking at Russian oligarch, you're not getting the obituary of someone who's died in Kentucky 35 years ago. So yeah, that's the sort of situation as I see it, and actually one of the reasons why I'm really hopeful for AI in this space.
Yeah, and thanks. That's a great segue also back over to David from a technology standpoint. I've worked with David, and we know that Ripjar has a lot of techniques, right, to handle, and those techniques are there to make it easier for getting that needle in the haystack, finding that article that you need to read within that ocean of news, and that kind of relates back to the volume, right, at the same time. So. David, not a direct question, but just in general in that area, I know you have some comments to add.
Yeah, I think there's a few things in there around the search methodology and trying to hone in on how do you find this stuff, and I think that's something where machine learning, artificial intelligence, NLP, all of those technologies we talked about can radically transform what those people do. So it isn't about having 10 people on a project or 20 people on a project. It's about making the quality of their work more efficient. So anytime you've got humans searching databases or humans searching Google, that's going to be a hugely inefficient process for lots of reasons. Probably about a third of those searches probably will come back with nothing at all. Many of those search results will return more documents than any human could ever read through. So there's just a tremendous inefficiency with just a search-based platform or a search-based workflow. When you can introduce AI into that mix, you can flip how you're finding risk. So the AI is finding candidate matches for you based on your client identities that might be relevant. Now, it's not 100%. Always technology is about reducing the burden. But what that can do is mean that the 2 people, 3 people, 10 people, whatever team you've got on this project, they can spend their time much more efficiently rather than just searching through noise and filtering through garbage.
Yeah, thanks, David. I think that definitely answers. There's a bunch of questions in here about false positives and how to remediate and get through. And technology is there to help us. And structuring the data so that technology can be applied to it is a benefit in this space. And getting the right tool in front of the person, which leads into kind of another question. I believe this might be for you, Ken. I'm not sure if others would want to chime in. But it says, okay, we understand to screen at the right time, but any thoughts on which lines should be screening, meaning first line or second line of defense?
Thanks, Kevin. I think it depends on who you ask. If you ask the first line, they'll say it should be the second line. If you ask the second line, they'll say it should be the first line. I think there is a reasonable compromise. It's important to note that the risk is owned by the first line. It's their clients. They know them. They are the ones responsible for them. And so there is some logic to saying that the adverse media screening should be done by them, because it's just another element of ensuring that they understand and know their clients best. On the other hand, given that the second line is more more conversant in financial crimes risks and are subject matter experts in those types of areas, the first line will tell you, I don't really know what it constitutes an ABC risk or a sanctions risk or an AML risk. A prime example is that, if somebody is doing a search for company XYZ and they get their search results, if there's an article that says company XYZ being investigated for bribery, everyone pretty much knows that's an adverse media hit, first and second line. If, on the other hand, it just says company XYZ associated with Unaoil, unless you are really steeped in ABC matters, that won't automatically trigger you to think, Unaoil is a massive ABC scandal, I may need to look at that more. But a second line person would, and an ABC specialist would. So there are tensions there. For us, we have found that there is a lot of efficiency in having the first line do the first layer of adverse media screening, because which has entailed a lot of kicking and screaming to get people there. I think we're getting to a point where people understand why that function should reside there, but it's an evolving lesson. It takes a lot of time and patience by the second line personnel who typically have done this type of operation to train people up, to get people to understand and attuned to the risks that we are aware of, so that when you're dealing with adverse media screening that is escalated to compliance, it is genuinely something that is higher risk. The lower risk things can typically be handled by the first line. That's a model that works for us, but it will depend on your institution's degree of comfort and where you want to put the resources in. Back to you, Kevin.
Yeah, thanks, Ken, for adding kind of your side. Certainly every organization is going to have their own way, but your expertise, I'm certain, will help that individual who asked the question. So look at that. We flew through an hour. We are up on our time. We do appreciate everybody attending. We hope you got a lot out of this. It was a great round robin of a conversation. Just some housekeeping. You're going to get an email from us that has a copy of this recording. You're going to get the best practices guide. You're going to get the slides that we've gone through. And we will certainly do some follow-up with you as well. So on behalf of Dow Jones and all the panelists, we again thank you for your time and enjoy the rest of your day. So long.